There we go. It's true. Let me start that again. Sorry. It's Wednesday. That means Magnus Heystek is our guest co-host of the BizNews Power Hour tonight. I've got some really interesting ideas to throw at you, Magnus, not least starting off from the basis. You've done a lot of work on the parlous state of South Africa. We've discussed this at length many times, but what next? And I guess that's really the big question. You're South African, I'm South African, everybody, or many people who are listening to this are South African as well. For us, it's not really an option to up sticks and go and live in other parts of the world. So what do we do about this craziness that's happening here? We've got a former president who doesn't want to go to jail, even though, my goodness, he deserves to be there for the rest of his days. We've got municipalities that are imploding. We've got corruption that is seeping out of the pores of governance in this country. We've got public finance, which is just completely out of control. You might remember in the budget, Magnus, Tito Mboweni, the finance minister, said they would cut 265 billion rand, off the public sector wage bill. Now we've got a settlement which is actually going to add to the public sector wage bill. So what they were saying in Parliament in February was just nonsense. So all of these things, and it's pretty well documented, but the question has to be, what do we do about it? Do we just throw our hands up and say, create a little bubble, or how do we address and fix this thing?
I don't know how much time you have, Alec, but that's a very big issue, and we can talk for hours, if not weeks. And it really is a very big concern to myself and to a lot of my clients, if not most of my clients. And as like you, South African, my kids are here, all of them are here, my grandkids are here. But that doesn't mean, we can just accept what's going. There are a lot of things that individuals, families, or family units can do to protect themselves. That is their first priority in my life, is to seriously look at their finances and look at what they're doing and how they react to what's happening. And this has started a long time ago, where there were certain trends very evident 10, 15, 20 years ago. And it's already happened. A lot of people who have money have moved into security estates, golf estates. That's the nature of human condition. They go and form these bubbles. They go and buy their own security. They go and buy their own education from private schools, medical care, etc., etc. That's for the people who can afford it. And that trend...
Yeah, like a parallel to the state. Not a parallel state,
yes,
but a parallel to the state.
Now, Frans Cronje, in his book and in his talks, has been talking about this for a long time as well. So people have been moving physically from less safe areas of the country, mostly up north. They've moved down to the Cape in enormous droves because they not really perceive it as safer and better. It really is. It is a better managed province of this country. So the North-South movement has been substantial and is accelerating, in my view.
But why haven't you, Magnus? Why haven't you gone south?
Well, I have a property or two in the Cape, and it's well known that I have a property in Mauritius. Up to now, for personal reasons, my daughter matriculated last year, and I was not going to move. And she was doing very well at school, academically, sport-wise, and I was not going to upset her and disrupt her schooling to move down to the Cape. That is still on the agenda in the next year or two. But as you well know,
personal circumstances. It isn't because you don't want to, or you're not saying one thing and then doing something different. We all have personal circumstances.
Correct. So now it's becoming a real decision that my wife and I have to make. Do we sell up north and then move down to the south? The problem is the property market in Johannesburg, the greater Johannesburg, is very, very quiet and in fact quite dead. And, it's not a great time to be selling. So yes, in the next year or 12 months, 18 months, I will be seriously considering selling and moving down to the Cape. As an alternative, I do want to spend some time in Mauritius, building up my businesses there, and even spend some time in Europe, 3 months in Holland or 3 months in the UK. But not everybody is as fortunate as I am. Now you come to the average South African family who's got a limited portfolio, maybe 1 or 2 properties, a pension fund, and some discretionary investments. And that's where, and I've sent you some stats on the relative performance of the JSE versus offshore, and I can send you mountains of stats. That's where the individual needs to step in and start making decisions in terms of creating an offshore nest egg, which has protected you over the last 10 years, and perhaps even liquidating some of your assets in South Africa, which is a drag on your performance. We have a lot of clients who sit across the table from us and they say, Magnus, I am asset rich, but I've got no cash. They've got properties, they've got maybe a farm, but they don't have money. Their pension funds have also not done extremely well the last 5 to 10 years. So they're starting to run into a real problem, and people need to start making decisions and start looking a little bit broader when it comes to building an investment portfolio. And you need to start thinking as a global citizen, an international citizen, because who knows where this can all end. 3 or 4 years ago, we were just talking, fast and loose about the platteland that's falling apart. Now it's become a major economic catastrophe. We can quantify it. It's billions and billions of rands. It is now on our doorstep. I think our biggest issue to come still, in my view, is the collapse of our public finances. We've got very lucky. Your guest last night, Stephen Nathan, said we got the get out of jail card because the commodity cycle spiked up last year and it attracted a lot of revenue. But with that, we can plaster over a lot of the gaps in our budget system. That cycle is already turning, and I don't think it will be repeated. So the budget deficit is going to come back to be a major problem. You and I are going to talk about it more often in the future. The tax base is just disappearing. It's melting away. And at some point, reality is going to catch up with all the political promises, and it's the poor old taxpayer is going to pay more taxes. Our budget deficit is going to blow through the roof, or it could blow through the roof, and there could be further downgrades and defaults. That's the economic scenario. I know it's a bad news story, but that is the reality that we are living with.
When you just unpack that a little bit, you talk now about a macro sense. In other words, the tax for the country as a whole. But last week we were talking about the very real issue of rates in municipalities being increases. I don't know what your property values are, but I was having a look at mine the other day, and it's at least 25% above the market value of my property. So I'm paying rates and taxes based on an inflated value. I'm pretty sure that the city of Johannesburg or Sandton, whichever one it falls under, is not going to reduce those rates and taxes in the next year because they need more money. So they'll bump that one up as well. So you're getting this disconnect with reality at a macro level, national treasury, income taxes, corporate taxes, PAYE, etc., and also at a municipal level where your domestic or your municipal rates and taxes are just accelerating. But the question really in all of this is, what do you do about it, and can you change it?
Well, first of all, most taxpayers feel powerless. They can't control it. They can't vote out the ANC-controlled municipalities, and that's the starting point, is local government elections, where I think we could see some surprises, and that would be one step. But in certain areas of the country, the ANC is so dominant, it's not going to change. And as that article I explained last week, I mean, it's affecting listed property, unlisted property, small towns, big towns. There's just a massive evaporation of money taking place. On a personal level, what's happening to you and to me and to my neighbor is happening all around the country. And everybody, most people are sitting at night or the end of the week, month, they're saying, I don't have cash. I do not have disposable income to go and spend for luxury items. And you can see it in a wide variety of places. You look at the Discovery membership that's dropped by 30% in 3 years, especially the high-end schemes. Everybody is downgrading. People are downgrading their cars. People are driving their cars for longer. They're downgrading their schooling. And we now hear about private schools that are shrinking because people cannot afford those extravagant fees for schooling. They're taking kids to cheaper schools and to even private government schools. So you've got cars, schooling, medical. People are traveling less. Our motor car sales, if you compare it to 5 years or 10 years ago, are actually 50% lower than 10 years ago. New car
That's
sales.
extraordinary. Yeah.
That shows the bottom line is, and there's a piece in another website, Business Tech, this morning, which I 100% agree with. Middle class is being wiped out. Our middle class is very quickly moving down to lower class, in the sense that there's not much money left over. Why? Taxes, rates and taxes, and all kinds of taxes have shot through the roof. Investment returns in SA have been pedestrian or sideways, and in fact down in many cases. Salary and wages have not kept pace with inflation, and now we're at crunch time. There's just not enough money. People are starting to drag down on these savings. They are taking more debt just to get to the end of the month. So that, together with the low economic growth for the last 10 years, has really, really shrunk the middle class fairly dramatically. And even the rich, or the so-called rich, especially if they are asset rich with lots of property and farms and a wine farm or two, I'm hearing talk about people seriously going under because of, first of all, the economic stagnation leading up to the COVID, and then you had the COVID, and people are going bankrupt. They're just losing their assets. There's no denying anymore.
But what are you saying to the middle class or the previously rich, your clients who come to you and ask for your advice, and they can't sell their assets? Or do you just say, take what you can get from your house up north and perhaps move south because it is better governed down there? What is your advice to them, Magnus?
I can't give you one rule that applies to everybody, but it's surprising how some people are, perhaps they're not that informed, and they tend to stick to the old formulas that have created the wealth, and they refuse to change their mindset. No, I must not sell because the property guys are telling me the upturn is coming. So they hang on and they hang on and they hang on, and it just gets worse and worse. The same with a badly performing stock market portfolio or a local asset portfolio. I mean, every time you open up the media, someone is saying, now's the upturn, that our stocks are cheap. So people have been brainwashed, and they're actually petrified. They're so terrified to make a mistake because there's this overwhelming marketing machine out there, and it's a very powerful marketing machine from the local asset managers who can spend considerable amounts of money. And the one message that they're pumping out is, don't sell, wrong time. Offshore markets are expensive. And they've been wrong for 10 years, Alec. And I've got a whole file here. I actually call it my forecast file. Year after year, I file all these forecasts, and nobody is holding them to account for getting it horribly wrong. And here's a very important point. Asset managers, fund managers, call it what you like, are not investment advisors. They have no consequences that comes back to them if they get it wrong. It's the advisor who has a different relationship with their client, who actually needs to be concerned about the outcome and what happens to that particular client. So a fund manager can say, oh, sorry, I made a mistake. Tough luck. Those are the markets. I cannot take that position, and I'm deeply, deeply concerned about so many people who still take bad advice, which is biased towards supporting a badly performing economy, and it just doesn't make sense to me.
I guess it's also a faceless victim if you are one set removed from the person who's doing the investing. So your client, for instance, comes to you, says, Magnus, why did you tell me to do this? why did you actually lose me money? Whereas on behind you, the institutions don't get that engagement or that direct engagement, which makes it more difficult. But just to close off with that question now, is it still invest offshore, get your money to a lower risk location? You might want to live here because you're a social being, and there's a great place to live in many respects. Still, there's still opportunities in South Africa. Or are you saying that maybe we've got to a point in our history in this country where it's too far gone? And I heard people talking more and more now about a failed state and what that means and the implications that will carry for people in this country. I mean, immediately there's an enormous panic when you even mention failed state, and hopefully South Africa is not genuinely moving towards the Zimbabwe type situation. But I guess the risk has to be growing.
The risk is growing, and the concept of a failed state is a far more complex discussion than just yes, it's a failed state or not. And you should get a gentleman by the name of Claude Bessak on your program, who's a specialist on failed states, and he's done an enormous amount of research on this issue. But nevertheless, there are certain parts of South Africa that have already failed. I am talking, and it's not a country that overnight just collapses, but it's starting to collapse like a big Jenga game. If you pull out this and you pull out that, at some point it is going to collapse. I mean, yesterday, as an example, and there are many of these examples, a cash-in transit truck was robbed by 30 gun welding AK-47 robbers in Krugersdorp on a national highway. They actually closed the highway while they were robbing the cars. That seems to happen in failed states. We have the railway line to Richards Bay has stopped working because they're stealing the railway line. We have Rio Tinto, which is called a force majeure on their plant in KwaZulu-Natal. It is the biggest taxpayer in Natal. They've stopped operations. And I can carry on. So there are definitely certain parts of the country that already resemble a failed state. So you cannot just say, no, it's not. It's never going to happen. Never Zimbabwe. In many instances, we've gone far beyond Zimbabwe as an example. It's sometimes not even the appropriate example. Our crime rates are just simply so much higher than in Zimbabwe and Botswana and the countries around us, etc. But you cannot just simply say it can never happen to South Africa. Somebody thinks a little bit further, needs to, in his own personal scenario planning, have a 5 or a 10 or a 15% allocation of thinking and planning to a failed state or a semi-failed state or a completely failed state. I mean, you know that Clem Sunter always used to talk about the high road and the low road and the various percentages, and I've listened to him many times and played golf with him. I would suggest that using Clem Sunter's definition, we already about 30% up to a failed state in certain instances, unless government doesn't step in and do what is right. You've mentioned the salary issue just now. When the ratings agencies warned that they'll be watching this promise by the finance minister about our state salaries, and he made all kinds of promises, got good press, and now's the turning point. Boom, here they come, they give them more money, and there we go again. And there are many issues. You know, we desperately hope and pray that it doesn't happen, but there are definitely some elements, and you cannot ignore that. And you cannot just simply say, oh, it'll get better, we must be optimistic. That is not an investment strategy.
Well, hope is not a strategy.
Yes,
hope is a state of mind. But so what do you do about it?
Well, you tell people to consider the various alternative outcomes, and you tell people you cannot predict the future, but these are your alternatives. Do you have enough liquid cash offshore that will give you some growth? You can still live very well in Africa, in a bubble, in an area that has lesser crime, and you have an investment portfolio, totally legal, totally acceptable everywhere in the world, to have a big chunk of your money offshore. I mean, I saw a report last week where the average Australian's super, they call it their super portfolios, has a 60% offshore exposure. South Africa only allows 30% via the pension funds. So in Australia, a modern country, more than 2/3 of their national pension fund is invested offshore, and that has protected them. That has built wealth. In South Africa, we come with this approach and we say, no, 30% is enough and you must be happy with that. It has not worked for us. Pension funds, and I'll be sending you an article very soon, has not grown in real terms after inflation for the average person in South Africa in the last 7 years and getting up to 10. Your pension fund has not grown because of Regulation 28, which limits the offshore exposure. But the big asset managers know this is the truth, but they like to conceal it, and they do not want to talk about it because they have a very cozy relationship with Treasury.
And a vested interest, a deep vested interest. If you have to keep 70% in South Africa, who gets to manage it?
100%.